We're not buying in MACKAY at the moment at all because of insurance premiums. They're just too high. And this is a really important concept because there's two components to this, right? One of them, obviously, higher insurance premiums. It takes money out of your cash flow each week, right? Your rental yield, your holding costs are higher. Your rental yield would need to be higher to be break even, to be cash flow positive or break even. So that's one. There's a very tangible negative around higher insurance premiums. That's your weekly cash flow. But a more subtle issue that we've seen, and we feel it's the reason why Townsville has never really got moving. A few of those acquisitions were actually in Townsville. All right, and we stopped buying there. Only 2 or 3. We the data was looking really good for Townsville here, 2018, 2019. There were sort of 2 or 3, maybe even up to half a dozen acquisitions in Townsville on this chart. Okay, I would hazard a guess that they are these ones down the bottom here because the insurance premiums have hold back. They hold an area back. Okay, so even if you buy a property, that isn't as impacted and doesn't have as higher insurance premiums, or even if you go to Shore Insurance or those other companies with lower insurance policies, if the rest of the population doesn't have that or doesn't know about it, then they are going to be paying higher insurance costs. That means that they potentially are going to be turning over property more often because they can't afford the holding costs. If they're an owner-occupier, it puts them under a little bit more stress. Okay, if they're a landlord, they're going to have higher holding costs. They might be more likely to sell into the future. Or in the future, the buying pool might be detracted because there are less people wanting to buy there because of the insurance premiums. So it's not just it's not just the insurance premiums being more costly to you. It results in more turnover in the market and a smaller buying pool for potential future owners or current owners more likely to sell. And that, for me, we feel, and what we've seen in Townsville is a good example, it just holds back capital growth, right? We don't want there to be compromises there. So that's really the reason. The data's great for MACKAY. We have a blanket ban on MACKAY and above. Even though the data is great for Cairns and Townsville, many of our approved locations we actually don't buy in for clients because of those issues. Tom's just mentioned, no, we don't buy there because of insurance premiums. We usually aim for a maximum of $2,000 for an insurance premium. And you've got to be careful up there as well because insurance premiums in those areas have been going through the roof. I think last year in Townsville, insurance premiums went up something like 53% for the year alone. Tom's just mentioned last time he checked for MACKAY suburbs, the insurance was $3,100, $3,800 and $4,800 respectively. All right, so even if you're okay with that, even if you can handle the cash flow because the rental yields are higher, there's still going to be a lot of other people that are put off by that, and therefore the demand for the area into the future is compromised. That's the way that we have to look at these things.